every presidential administration has an impact on your investments. So how has the Trump presidency affected your financials? Jim Lineweaver is here to tell us and to offer options for taking advantage of opportunities. Jim is a certified financial planner professional with the Lineweaver Financial Group. Welcome back to the show.
Hi, good to see you again.
So has there been a lot of investment upheaval in the Trump administration so far?
Well, as of the taping of the show, as it relates to your investments that you and I are used to and for retirement and things, there hasn't been a tremendous amount of volatility. As a matter of fact, you saw some great gains since the election. So a lot of it is based on some of the things that we're going to talk about today, because part of the gains in the market are based on fundamentals, earnings are going up, and people are improving their balance sheets, things along that nature. But the other part of it has to do with the opportunity or potential that some of these other tax plans and things are going to come into play.
Okay. There's a few main changes you encourage us to pay attention to, starting with the tax plan.
Yes, as a matter of fact, these are ones that can really help not only corporations but also individuals. So one of the first ones is based on lowering the corporate tax rate. And what they're looking to do is actually take that from 35% down to 15%. Some people could argue there's a little marginal with write-offs in there too, but that's a big tax cut if it can get done. Doubling the standard deductions is huge because most people don't itemize in retirement. But if you could take that standard deduction and double it, that's going to give a lot of people in retirement some more spendable income or money in their pockets. We have 7 tax brackets now. They're looking at taking that down to 3, which is 10, 25, and 35. Simplify the code a little bit, which will help. They're going to totally eliminate the federal estate taxes. Right now, for anybody really over about $11 million, they could get hit with a federal estate tax. It's not going to affect most of us, but you know, hopefully maybe if they invest right, it might. But needless to say, that can get repealed. They're also looking at the alternative minimum tax and this net investment income tax. That can be a little confusing, but basically what it means is that in our marginal tax bracket society, the more we make, the more we pay. If we go too high on certain things and sell some things like capital gains, we may get hit with an extra 3.8% excise tax. They're potentially looking at eliminating that as well. So a lot of things that could potentially help the consumer and people in retirement.
Okay, one other category is his pledge to repeal and replace Obamacare.
Yes, now we're opening up a can of worms here. So the first pass in March obviously didn't go through. They resubmitted it in May. It won like 217 votes to 213, just a small margin.
Mini margin.
Yeah, but most people don't think that it's going to be totally approved in its existing state. They think there's going to be a lot of alterations to that. I think one of the major reasons why it did finally get approved is because they were allowing the pre-existing conditions to make sure that it wouldn't hinder anybody changing plans. So that helps. But, you know, time will be told how this really shakes out and how it's impacted.
How about deregulation?
This could be a big one. Okay, so this is where the market is reacting to, because what you saw is as soon as he got elected, your financial stocks, your bank stocks, things like that just have been going up tremendously, and also because of the rise in interest rates that are anticipated to take place in the couple that we've already had. So a lot of your financial institutions, actually, they can benefit from a rise in interest rate, but also they're looking at deregulating the oil and gas industry, energy sectors, things along that nature, and he's also looking at $1 trillion in the infrastructure play. So all that stuff could put more people back to work and bring more to the bottom line for people to spend.
Any other ways that our investments might be affected?
Yeah, what ends up happening is if we really look at this, there's a few sectors that have actually benefited already, and this was through May. But you're seeing some things like the technology sector, you're seeing consumer staples and things along that nature. And we have this up on the screen for your viewers, and then we also talked about those financials. So there are direct correlations between some of these policies and how the underlying people can benefit from their money. So as these continue to unfold, you want to make sure you stay in touch with your advisor, because there's a lot of things you can take advantage of.
It is complicated, right?
Yeah, it can be. That's why we offer a no-cost, no-obligation analysis for people. Really see how they're doing, analyze their stocks, their bonds, their investments, how it all ties together, and really try to help them out through these kind of turbulent times.
Great. As this administration proposes and enacts changes, you can expect your financial investments to be affected, so be ready. And for help, give Jim a call. His number's next.
For more information, call the Lineweaver Financial Group at 1-888-313-4009 or click to www.lineweaver.net.